With its worst Wall Street performance of the year, Tesla has caused a stir in the stock market. Should you sell your Tesla stock as quickly as feasible, or should you hang onto it longer? Come discuss Cathie Wood's most recent analysis of Tesla and its stock with us. Notable are Tesla's technological advancements and future plans. The business is committed to the development of artificial intelligence and has experience with it. They are widely distributed, albeit not always worldwide. The fact that they have proprietary data is crucial. Numerous businesses in our portfolios are able to better serve their clients because they possess private data that is not available to anyone else. For example, Twilio, with its trillion business-to-business customer transactions annually, gives salespeople and marketers useful insights about which interactions encourage people to move toward their products. Investors in Tesla should prepare for a lengthy and fascinating journey. After reporting its lowest quarterly earnings per share in 2 years, $0.66, which 10% below consensus projections, Tesla recently closed at $21.99. In just 2 trading days, this decrease reduced Tesla's market capitalization from $88 billion to $670 billion, a $138 billion drop. Likewise, Elon Musk, the CEO of Tesla, lost $3 billion in personal wealth as a result of the company's decline in value. Musk's wealth has historically been supported by his substantial Tesla stake. Longtime Tesla supporter Cathie Wood is upbeat in spite of everything. Wood stated that she has witnessed Musk succeed in trying circumstances in the past, and that she anticipates this one being no different. However, why does Cathie Wood think this way? Let's investigate. Tasha Keeney, the Director of Institutional Strategies and Investment Analysis at ARK Invest, has joined us. ARK's flagship innovation fund has Tesla as its top asset, accounting for around 10% of the portfolio. Greetings, Tasha. Although global deliveries fell short of forecasts due to Tesla's price reductions, I have a feeling you'll tell me this is acceptable. Is it because everyone thought it would be worse? Indeed, there are a few things to think about. People are anticipating the release of the Cybertruck, which is scheduled for the end of November. Tesla has persisted in cutting the costs associated with producing cars, which is essential for long-term sustainable profit margins. Price reductions had an effect on profits this quarter, but our long-term goals are our main concern. Their development toward a future robotaxi platform excites me because I think it will be far more profitable than the electric vehicle industry and has the potential to drastically alter the business paradigm. The concept of robot taxes perplexes me because it may eliminate my need to purchase a vehicle. How are you modeling that, and when should it happen so that your estimates make sense? Purchasing a car may not be necessary, particularly if you live in a city, but the robotaxi concept calls for a fleet system. As stated in their most recent letter, Tesla already has an integration and collaboration with Hertz. This quarter, they are focusing on app integration. Hertz may eventually store and care for these cars on behalf of its patrons. ARK Invest CEO Cathie Wood has been a staunch advocate of Tesla for a long time. Wood is still optimistic about the business and thinks it will transform the car industry, even though some people are losing faith in it. Tesla remains ARK's largest holding. However, given the recent lower-than-expected profits, Wood's theory regarding Tesla and its possible return may be put to the test sooner rather than later. Will Cathie Wood continue to be optimistic about this EV maker, or are things going to take a significant turn for the worse? Welcome back to Tesla Tomorrow everyone. Not many days had passed since Wood reiterated her support for Tesla when Musk presided over an underwhelming Q3 earnings call. He issued a warning regarding the status of the economy and the prices that customers must bear during this call. Expecting groundbreaking details on Tesla's next projects, the call turned out to be significantly less informative than expected, which caused a negative reaction in Tesla stock and a stir in the stock market. Does Cathie Wood's stock prediction for Tesla still stand to be true? Is there still room for Tesla to grow? As we look for the answers to these important issues, keep an eye out. Before we go any further, please make sure to hit the like, subscribe, and switch on notifications buttons if you enjoy this kind of content. This will help you remain up to date on all things Tesla. According to Cathie Wood, Tesla is headed for great success, which will have a big impact on the stock price of the company. Wood states that a number of things, including Tesla's forays into robotics, artificial intelligence, and energy, might propel the company's future growth. Additionally, she thinks that deflation will soon enter the market, opening doors for forward-thinking businesses like Tesla. Wood pointed out that the creative destruction brought on economic deflation might make other automakers suffer. These businesses may be forced to sell their commodities at a loss or be forced to pursue short-term strategies with less investment in innovation and maybe out-of-date products. For Tesla, though, this might not be the case. Tesla stands apart from other automakers thanks to its high level of innovation. Recent reports state that Tesla's Cybertruck would have an 800-volt architecture, which will lower the cost and weight of the battery pack and enable faster charging as well as higher margins. Elon Musk furthermore recently posted a video showcasing the Cybertruck's resilience during bulletproof testing using a Tommy gun. By strengthening its competitive edge and profitability in the truck industry and increasing buzz and demand for the vehicle, these changes may have a beneficial effect on Tesla's stock price. Even though Tesla is the top EV manufacturer in the world right now, it's vital to remember that their products are constantly changing. The carmaker intends to modernize and streamline the interiors of its vehicles. 14 years after selling its first Roadster, Tesla has now delivered 1 million cars throughout Europe. In addition, Tesla increased the number of testers from 2,000 to 10,000 by making FSD beta version 10.3 available to additional users. With this beta, Tesla cars can drive themselves through metropolitan streets, negotiate curves, and deal with tricky traffic conditions. Over time, this may benefit Tesla's stock price by highlighting the company's robust development and market share in Europe, demonstrating its technological leadership in autonomous driving and raising the value of its cars. Additionally, Tesla is making great strides in the solar and battery industries. In the next 5 to 10 years, Cathie Wood thinks this company will assist Tesla in becoming a trillion-dollar corporation. One major benefit of electric vehicles is their potential to reduce their environmental impact, making them environmentally friendly. Unlike fossil fuel-powered electricity sources, a car that is charged with electricity from nuclear, hydro, solar, or wind sources does not release any emissions. The Chinese government has given Tesla permission to start producing lithium iron phosphate (LFP) batteries at its Shanghai Gigafactory. Compared to the nickel-based batteries that Tesla presently uses in some of its cars, LFP batteries are less expensive and safer. These batteries are ideal for places where battery changing is common, such as China, because of their longer lifespan. Production costs might be reduced, margins may rise, and Tesla's competitiveness and attractiveness in the largest electric car market globally could all be enhanced by the efficient production of LFP batteries. In the future, this might have a favorable effect on Tesla's stock price. What are your thoughts on Cathie Wood's most recent remarks against Tesla? Tell us what you think of Tesla in the comments section below. Click on the next video to view more content similar to this one. I'll see you over there. Tell me if you require any other changes. Tesla stands apart from other automakers thanks to its high level of innovation. Recent reports state that Tesla's Cybertruck would have an 800-volt architecture, which will lower the cost and weight of the battery pack and enable faster charging as well as higher margins. Elon Musk furthermore recently posted a video showcasing the Cybertruck's resilience during bulletproof testing using a Tommy gun. By strengthening its competitive edge and profitability in the truck industry and increasing buzz and demand for the vehicle, these changes may have a beneficial effect on Tesla's stock price. Even though Tesla is the top EV manufacturer in the world right now, it's vital to remember that their products are constantly changing. The carmaker intends to modernize and streamline the interiors of its vehicles. 14 years after selling its first Roadster, Tesla has now delivered 1 million cars throughout Europe. In addition, Tesla increased the number of testers from 2,000 to 10,000 by making FSD beta version 10.3 available to additional users. With this beta, Tesla cars can drive themselves through metropolitan streets, negotiate Kerr.